Today, let's talk about the biggest stock in the S&P 500, Apple. It's been up 15% year to date, and most of that happening just in the past month. Basically, Apple's been having a slow start to the year, but it's been on a tear lately. So as usual, let's talk about the price, the valuation of it. Should we buy, hold, or should we run? First, what is Apple's moat? Well, actually what? First, please hit the like button. I almost forgot that part. Subscribe. I really appreciate it because it helps me out with the YouTube algorithm and it makes me feel very good about myself. Okay, so now that we got that out of the way, what is Apple's moat? An economic moat was a term popularized by Warren Buffett, which refers to a business's ability to maintain its competitive advantage over its competitors in order to protect its long-term profits and market share from competing firms. Just like a medieval castle, the moat serves to protect those inside the fortress and their riches from outsiders. In my view, Apple's moat is its customer loyalty. In fact, in a survey by sellcell, 92% of iPhone users said they'd buy another iPhone when it's time for an upgrade, which is up 1% from 2019. And just to give you some perspective, from Samsung users, 26% said they'd swap out the brand for their next upgrade. And that's 12% more people than 2019, which means those Samsung users ain't loyal.
God help me, old saints, y'all forgive me, but I gotta tell you, these hoes ain't loyal.
Part of Apple's customer loyalty is by design. Just think about how easy it is to integrate your iPhone to your watch. To your AirPods. I lost 2 pairs of those, so I don't have any to show you. But even your iCloud, your Apple Music, everything is also integrated. There's a high switching cost, and I can speak for myself on this one. I'm pretty comfortable, and I don't feel like switching to a different platform or a different ecosystem. And I may be a late millennial, but the best part is that you can see Gen Z and Gen Alpha having this same loyalty towards Apple. Okay, so let's take a look at the breakdown of their revenues. It's always the starting point. So I noticed right away that 54% of Q2 2021 sales were from iPhones, which is obviously the bulk of it, and it's been consistently in the 40 to 60% range every quarter, which is a pretty wild range, but that goes to show you how cyclical iPhone sales are. And this could be driven by how significant the technology has been updated in the latest releases to determine whether people upgrade or not. And most of their growth, however, has been in the services, their second largest segment after iPhones, and wearables, home, and accessories. And the growth and innovation in wearables has mostly been in AirPods and watches, and that's where the growth for Apple lies, in innovation and services. Aside from actual product releases like Apple's Pay Later, which was just recently announced, and it's just basically another version of Buy Now, Pay Later, similar to Affirm, whose stock, by the way, dropped significantly after this news, which, by the way, I never liked that because exactly this reason. There's such a low barrier to entry, and Affirm has nothing really proprietary that PayPal can offer, and now obviously Apple. So anyways, that's a side note. Leave that conversation for another day. Aside from that, there's actually a lot of rumors about what Apple's next product innovation is going to be, the big one. And they're not just rumors because there's actual R&D happening behind them, and Tim Cook has been aggressively spending in this category. By now, you've probably heard of Apple Car, which is Apple's not-so-secret project of building an electric autonomous vehicle. This would be a direct competitor to Tesla.
Do you see Apple building a car and that maybe being a threat to you?
Encourage more participation by whoever it is to create electric vehicles. It's quite hard to do, but I think companies like Apple will probably make a compelling electric car. It seems like the obvious thing to do.
Are you betting that that's going to happen? Have you heard anything?
Well, it's pretty hard to hide something if you hire over 1,000 engineers to do it.
So you think Apple is serious about it?
Yeah, I do. This is an open secret.
Apple has been recruiting ex-Tesla employees for this project. We've seen a lot of photos with Apple testing vehicles on the road, and we know that deep integration with iOS is to be expected, and they've actually received an autonomous testing permit from the DMV. Apple Glasses is another secret project where employees are working on virtual and augmented reality glasses, which would be a direct competitor to Facebook's Oculus. We've seen renders of these glasses, which look pretty cool if you ask me, and how they would differ from Facebook Oculus is that not only would they provide virtual reality experiences, but also augmented reality. What is the difference, you ask? Well, virtual reality refers to a full immersive experience in a virtual world. Augmented reality refers to a modified view of the real world. They've also been making hires and acquisitions in the AR/VR space, which again makes this a not so secret. Apple Health is another big one which has been known to the public, but it seems like they're struggling with it. In fact, the Wall Street Journal just published an article saying Apple struggles in its push to make healthcare its greatest legacy. What they were envisioning was hiring doctors and setting up clinics so users of the Apple Watch like myself here, who wears it in no video except this one because it's a nice prop. Well, I actually use it in workouts and it's pretty good there. But what we would be getting is essentially an enhanced healthcare service or a smart healthcare service, because the data from this watch would be transmitted to the healthcare providers who can provide us with, I guess, better healthcare. Again, I'm no healthcare expert, but that sounds pretty cool and pretty smart to me. Even if we throw these rumors or innovations aside, the big ones, Apple can just do little tweaks to its existing suite of services through value add-ons, and it can still boost its revenues quite a bit. Think about stocks, for example. In a stocks app, if it allows us to buy and sell stocks on its app, again, this puts people like Robinhood, businesses like Robinhood and Webull in jeopardy, because Apple, again, it just integrates with everything like that. Apple doesn't have to be the first to market. It doesn't care to be. It just cares to be the best. The breakdown of Apple services, which isn't public, and its growth has been estimated here by Trefis, which, by the way, aligns with my own 2025 forecast, which I'll get to later in this video. But from it, you can see that the bulk is derived from the App Store, and licensing is mostly derived from Google paying Apple to be its default search engine in Safari. This is an area that's going to continue to grow. Can you imagine the incremental revenues Apple would have if it just decided tomorrow it wanted to be its own search engine, for example? Or let's say it just wants to license out to Amazon. There is just so much potential even with these minor tweaks I just mentioned. Okay, so as usual, let's start by looking at how we're gonna forecast their revenue. So over here we have their historical 2018, 2019, and 2020. And you can see here, actually in 2019, they were in negative growth. And in 2020, it was a modest 6%. Actually, iPhones, their biggest businesses, was down 14% in 2019 and down 3% in 2020. And you can see much of the growth happened in the other categories, especially in wearables and services. In 2021, however, we can see a lot of growth in the first 2 quarters. It's important to know that Apple's fiscal year is actually 3 months behind the calendar year. So Q1 of 2021 is actually October to December of 2020. So it's important to know the timeline, because we know that a lot of this demand has been brought from COVID and the pandemic and the super cycle with upgrades, with regards to semiconductors and everything. So this is where this uncalculated demand came from. And again, in a lot of areas, and Apple is not the sole beneficiary of this. So far we had 34% growth, and this was completely out of the blue, and this is unexpected. So can we expect this going forward? Probably not, right? I don't think that's prudent to assume, but we're going to continue to see the demand from what's happening. And in fact, just recently, Apple announced that they were boosting orders for their iPhones by 20%. So this was a positive catalyst for Apple stock going higher just recently. So I expect this demand to continue into the rest of 2021. But it lowers, 25% growth and 20% growth I kept in all categories. However, after that, in 2022 and beyond, I put iPhones at a 5% growth, 5%, 4%, to get in line with the trend that we were on prior to this disruption in COVID and whatnot. And I think that's reasonable. However, we don't know when to predict when the next upgrades are going to happen, because now it's 5G, and who's going to upgrade to 5G? It's supposedly going to be pretty high. So again, these are just estimates, but I always like to be conservative. I put 15% growth down to 10% growth for wearables and services, because these are smaller categories, and we know that Apple need to focus on them in order to grow revenues. And I think that is the right move, and I see them doing it. So I feel comfortable with this. And again, this is in line with analyst expectations. So let's move on to the free cash flow model. So all of that was plugged in here for revenues. EBITDA, they've been at a consistent 30% average EBITDA. So I carried that average up until 2024, but in their terminal value after 2025, I increased this by 1%, assuming that services, naturally, their second largest segment, will bring in more margin. So it's a fair assumption to make. And then I took a percentage of their depreciation and tax based on history and just rolled those forward. Factored in their non-cash expenses and changes in working capital to come to their cash flow, unlevered and discounted cash flow, using a discount rate of 7.3%. Again, these working papers are available to my email subscribers. So if you're not on the list, then please get on it. And obviously you can play with these in more detail. But I got a net present value of future cash flows. That gives me a fair value per share of 162 bucks. So right now we're trading at 150, which means that there's about a 9% upside, and this gives us an IRR of 9%. So is that attractive? It could be, but it's not really that attractive to me as of now. But again, we're not factoring in any of those big innovations or just those just changes to services. I mean, we are forecasting 15% increases in services, but I think that the potential is honestly a lot higher if you start to value those things. But again, I don't know how to value those things, neither can anybody else. So those are things that you kind of have to know. But for my purposes of calculation, I don't want to do those because I just like to look at the most conservative side and then add those on top. But here's the thing where we have to look at the valuation. The valuation that Apple is currently trading at is pretty high. Excuse my language. But this is where I took the targets in 2024 and put them in more aligned with where they have been in history. So for example, the price to free cash flow ratio, if we go back in history and they're at about a 17.5, this is where we get $100. Now it doesn't look so pretty. Price to sales ratio, if we go back to 3, we're at 80 bucks. Again, doesn't look so pretty. Same thing with PE ratio at 20. In 2024, we're at 120 bucks. So although we're saying that yes, the potential is high, we got to look at where it's been trading. That's always a risk because that's where the prices can go down, and that can be your downside. So that should be factored in the calculation. And what I did was just took a portion of those, so like 8%, 9%, and gave the bulk 70% weight to the fair value, and I got 140 bucks. So that's in line with where we are right now. So what does that mean? What it means is basically I wouldn't be a buyer here, but I would hold the stock because of the upside potential it has. Should Apple confirm any of these rumors, whether it be the Apple car or anything, this stock is going to go to the moon. It already has such an embedded value in it, and you add these things on top, it's going to go crazy. So the upside is very high. The risk of the downside is really just a compression in the valuation, which is the market risk overall right now I see. But overall, I like the company. However, it would be prudent to take profits here because valuations are high and trim your position, which is in full disclosure what I have done. But again, I like the company, I like the stock, but I wouldn't be butthurt if you took profits and, did the smart thing, because at the end of the day, it's just investing. It's not emotional. Don't get mad at me. They're just numbers, and you take them and you do what you want with them. I'm just a random guy on the internet, and this is not financial advice. The other risk that Apple faces is obviously its inability to innovate. Now, Steve Jobs was the innovator of Apple, and he's obviously a high benchmark. Now, people have been questioning Tim Cook, but maybe not so much after the release of AirPods and the M1 chip. I don't know. The other risk is antitrust legislation, which we know Biden is really working hard towards. So the fact we can't just assume that Apple can just launch these services like that and integrate it to its suite of products or services, because that would probably be in violation of new antitrust rules that may come into play. So that's something to consider. So yeah, I just want to give you my numbers, give you my thoughts. You do you, but just always, when you want to invest, you want to look at both sides, the pros and the cons. Again, there's nobody that can be right. Nobody honestly knows anything. Nobody knows shit. It's all marketing. Everybody just pretends like they know it all. And I'm not the guy to pretend like I know it all. I like to see both sides. So if you like my approach, make sure you give me a follow. Make sure you give me a like. I hope you appreciate this video, and I'll see you on the next one.